Hi there, welcome to Asia Business Report. I hope you all had a wonderful weekend. And of course, it is the start of a brand new week and the start of the second half of 2023. And this week, we're keeping an eye on several things like the Japanese yen, which crossed the key 145 to the dollar level last week. And speaking of Japan, the central bank will be releasing its Tankan survey later this morning. And the reading will tell us how the country's manufacturers have been feeling. And over in China, another indicator on manufacturing is also due. It covers small to medium-sized companies, which should give us insight into how China's private sector is doing. Then on Tuesday, Australia's central bank meets and investors will be watching to see if authorities will hold steady or hike interest rates because of inflation concerns there. And rounding off the week, US jobs data could bring clarity to the timing of more possible interest rate hikes. Well, for more, Peter McGuire, a financial services firm, Trading Point, joins us now. Thank you so much for joining us on the program. Firstly, I want to ask you about the Japanese yen. 145 is quite weak. Do you expect Tokyo to intervene anytime soon?
Well, good morning. Yes, we certainly do. I think they wouldn't be surprised. They've done it in the last matter of 6 or 8 months as far as intervention when it approaches that 145 to 150 sort of handle. So, yes, we won't be surprised to see intervention sometime in July.
And where you are, Australia's central bank will be meeting this week as well. It's kind of a tricky balancing act for them, isn't it? Dealing with inflation, whether or not to raise interest rates. What's you expecting?
Well, exactly right. I mean, we've got about a 37% probability of another 25 basis point hike. Analysts have been proven wrong the last 2 months. So are we going to see a trifecta and they're going to be proven wrong again and the RBA goes against consensus? So, jury's out at the moment.
I want to ask you about China's economy as well, because we've been getting quite a lot of weak economic data about the second biggest economy of the world, which of course is a crucial trading partner for Australia. How concerned are you?
Well, we're very concerned as far as the health and naturally, the internal demand from China. We've got exports going at record levels in the sense of iron ore production and strong demand from China in that regard. But the overall, weakness across the global economy is weakness that's internalized in China, and that we've felt that in Australia with a weak dollar.
I guess for the US, it's a very different problem where we are going to get jobs data and the economy has been showing quite a lot of resilience despite some predicting that the recession might be just around the corner. What are you expecting in terms of the jobs data and what impact would that have on rates decision by the Fed?
Well, we've got around about a $200,000 employment read this Friday. This is what analysts are coming out with. We had 339,000 build in May, so it'll be dropped off a little bit, but overall strong numbers from an employment sector. And as far as rates are concerned, we won't be surprised to see Fed Chair Powell ratchet them up again. So I think we're in for another tightening of US and certainly across the world.
I mean, how soon could that rate hike come? Could it come actually, this summer?
I won't be surprised. I think, again, the jury's out, but I think overall sentiment is, yes, you will see it in the Northern Hemisphere summer for the Fed. And it could even be this month. Let's wait and see.
Peter McGuire joining us from xm.com. Thank you so much for joining us on the program this morning.